carry forward, bought forward was bought because of this concept called going concern. So what exactly is a going concern? Concern here means not as a doubt. Concern is also a word used for firms or entities. It is a big concern. This concern word can be used as a doubt as well as for big entities also. It is called as a concern. So when you say the word going concern, it means a company which is going forward. So when you're talking about this chapter going concern, you as an auditor need to determine whether the company has the ability to run for the next one financial year. So there are various ways in which that can be determined. The standard itself has given certain assumptions where you may check as to whether the entity has the ability to carry forward as a going concern. There are some indicators the standard has given. Let's have a look at them. Net liability position. What is a net liability position? Current liabilities after removing all the current assets. In spite of that, you still have additional current liabilities to pay off. So that should give you an indicator. Okay, there's more liabilities than the asset. Will the entity be in a position to handle this? Non-renewal of borrowings. Borrowings, the bank is not renewing it. They want to close that and they want to ask the company to repay. They have asked the company to repay. What is a renewal of borrowing, Abdina? There are certain types of loans where it works based on the usability. As in, when you withdraw, you have the chance to renew that borrowing. So, when you make a withdrawal, only from the date of withdrawal, you will have the charges. So, as in when you repay, it will get stopped. Again, when you are withdrawing, your loan will start. So, this is something called as a renewal of borrowing, where they open a credit facility sort of option, and you can take out the money, pay it back, take out the money, pay it back as long as you want. And the bank will be willing to support you in that by only charging you for the period for which you have actually taken the borrowing. Also, when it comes to the large scale long term borrowings, if the bank sends out a notice saying they will not be willing to wait for any further EMIs, kindly make a bulk payment. அப்படின்னு ஏதாவது அவங்க சொன்னாங்க அப்படின்னா, even then it is called as a non-renewal of borrowings. Then think of withdrawal of financial support. Financial support means equity or debt at any point of time. If they are lifting their hands and saying we cannot support you as an entity any further, then obviously it's a big concern, right? Your capital source is leaving. When the capital source leaves, how does the company run? So that's one major concern. When parents are leaving, how will the child survive? That is one major concern. Next is adverse financial ratios. So these are all some of the indicators. Okay, it's not that just because it is there, it will be a going concern. They are just giving you a indicator. It doesn't necessarily mean that there is a going concern, but these are like the basic parameters auditor needs to consider whenever he is having a question on the going concern. Next is adverse financial ratios. Financial ratios in FM also we have read. So any of these ratios, if you are seeing it as an adverse one, let's say profitability ratios are not looking good. So will they be in a position to survive? Will they be in a position to manage the operations? All of that needs to be analyzed. Inability to pay creditors. Creditors naturally, apart from debt, all the liabilities, if you are not able to pay off long-term creditors, short-term creditors, that is also an indicator. Then you have substantial losses. There was one particular entity that I've seen where the substantial losses are close to $130 million till date. $130 million. Still, the company never gets a going concern tag on it because the owners are very strong, financially very strong. For them, $130 million is peanuts. Just imagine $130 million is peanuts for them. All the other companies that they hold are like magnanimous. So for these people, this number is nothing. And even for this entity, what happens is based on the nature of these operations, they may make this $130 million in just one single sale transaction. That is the nature of the business that they are running. So, because of that, these people, for these people, we have reported any going. So, though this is a indicative financial concern or going concern, the fact that the company can wipe out all the accumulated losses with one single one single transaction. But getting that sale transaction, they do various things which uh, charge for which they charge very hefty amounts of money. So those hefty amounts of money when they charge will definitely be a challenge for them. Next, negative operating cash flow. Negative operating is instead of you getting any money out of the business, you have to instead pour more and more money into the business. Next is deterioration in value of assets. This have a lot of entities in COVID. Suddenly, there is a value drop in what is considered as the assets value in the market. See, when the market as a whole is it any better, Keshav? Or is it the same? Okay, this issue will be there for today, so let me know in case you guys are having trouble. So next is deterioration in value of assets. Deterioration means drop in value or wipe off of value. The first thing that we can consider is the stock market investments. Nowadays, if you are aware, the stock market has been very highly turbulent in the last 1 week because Russia is yesterday Russia had moved into Ukraine for going on a full scale war. So based on this, many other countries are going to be affected. So European countries are going to be affected because of which European links with India, Russian links with India, Ukraine is going to get affected. All the flights to Ukraine, direct flights to Ukraine, have been cancelled. So, a lot of things have happened because of which the stock markets are very highly turbulent. Just imagine in COVID scenario also, many companies equity value wiped off like anything. It dropped three times, four times. There many companies are there which are struggling to recover from that drop. So this is what is deterioration in value. It is not a small drop. It must be a big, large chunk that must be wiped off. And that happens in situations like the 2008 financial crisis, COVID scenarios, or any session where the market is doing very bad, or where the company has done something, or one of the major stakeholders or major directors is a public figure and they have done something. On the Mari instances, you get to face this music. And one of the other indicators is discontinuation of dividend. This is the very reason why Steve Jobs never paid dividends. Steve Jobs, throughout his entire career, he never allowed Apple to pay dividends. So the reason is because once you start paying dividends to people, they start expecting. And they don't just expect, they expect more and more. That is one major issue with the dividend. So once you make people get used to the dividend concept, what happens is next year, if you issue the same dividend, they'll not be happy about it. The share price will drop. Even if it is a small drop, it doesn't matter. The share price drops. So it's going to affect the health of a organization because the perception, the discussion in the market, everything changes when it comes to dividend. There are some companies which thrive because they give a good dividend. There are some companies which thrive because they never pay any dividend. And then there are companies which, all the other companies which are trying to find the balance between no dividend and a good dividend amount. They keep fluctuating up and down. One year they give 8 rupees, one year they give 5 rupees, one year they give 1 rupee per share. So this fluctuation, this wild fluctuation causes investor, for them to become very unhappy about it. So they will not be sure whether what amount of dividend will be receiving. So based on that, the investor sentiment will keep varying. So not just reduction of dividend, it is discontinuation of dividend is a major concern because they'll be wondering why there is a reason why the dividend has to be discontinued. When you have profits, you will naturally pay dividend, but otherwise, when you don't have, that is when you will start thinking about it. So that was with respect to the financial conditions. Then we are coming to the operations. When it comes to the operations, the first thing that you can consider is their intention to liquidate. The intention, this word is important. The intention. What is liquidation? Liquidation is basically trying to sell off the entity. It is you trying to sell off the entity or you trying to divest in that particular organization. So when the management has any plans to sell off or divest, then it needs to be discussed in the audit report or the financial statements because the company may not exist in the very next financial year. So that needs to be bought into, but that needs to be brought to the notice of the investors. Loss of key managerial person. What is a key managerial person? It is directors or CEOs. They are basically called as the key managerial person. They are the ones who are sitting in the board of directors or the independent directors. These people, when you lose an important person, when you lose an important guide, when you lose an important uh, public figure in the market, then there is going to definitely be an impact on your organization, because either because people come to you because of that person. Let's say, just think of Apple without Steve Jobs. Okay, just think of Apple without Steve Jobs. There was a time when Steve Jobs was kicked out of Apple. Steve Jobs, he was technically not the founder of Apple, but there was a time frame when Steve Jobs was kicked out of Apple, and that is when he went and thought and bought out this company called Pixar. And you can see where Pixar is today. And because of Pixar, he went back onto the board of directors of Apple. So the very word Steve Jobs and Apple are like they're connected. You cannot think of anything else when you say Steve Jobs or when you say Apple. By default, the word Steve Jobs comes to your mind. So this is what is a key managerial person. When you have someone who is like so attached to the company, or there is a guiding for the person is the guiding force behind the operations of that entity. In those cases, if they are leaving, that means there is something substantially fishy about that company. Now, not just key managerial person, sometimes it so happens that, let's say, someone like Rakesh Junjunwala is investing in one particular entity. Investors will be very happy about it. They'll be like, oh, Rakesh Junjunwala has invested. That means there must be something about this company that is worth investing. And people will just copy his trades. They will just act exactly in the way in which Rakesh Junjunwala acts. And they will simply copy his trades, and they will enter the company. Now, more investors will naturally flow to that company just because Rakesh Junjunwala has bought some shares in that company, and the stock price will definitely increase. Even an investor can make the stock price increase. People like Warren Buffett, people like Rakesh Junjunwala, when they enter any company, they don't enter in small amounts. They enter in millions only directly. So when the company is receiving such a substantially influencing investor, definitely they'll have a big boost to their image in the market. Now think of the same thing in the reverse. When they exit, when someone like Warren Buffett, when someone like Rakesh Junjanwala is exiting the investments in your organization, that means either they feel they have received the money out of it, or there must be something wrong from that organization which they smell. So they will be having information which normal investors may not be having, because these people are extremely wealthy. So they'll have a team which will get some knowledge about the organization, everything, wherever they're investing. So when such influential people are leaving the organization, it could be key managerial person, it could be anyone associated with the entity, it could be investors, anyone. It could be even a employee also. When they are leaving the organization, people in the market may start questioning what is happening inside, and this question may cause troubles for the companies. And there are many companies across the world where, just because of small doubt in the investors, those companies have to be wiped out, because the investors are sometimes not very satisfied with the responses of the organization. And naturally, in those cases, if the PR is not handled properly, by default the company goes down. Next, loss of a major market, key customer, or franchisee. Not just from an investment perspective, but also from an operations perspective. Yeah, now, think of Airtel's position. Earlier, they were one of the strongest market operator before Reliance Jio has come into the picture. Now, after Reliance Jio has entered the market, the whole dynamics has changed. The power has shifted from Airtel to Reliance Jio more recently. Now, this is something that was completely unexpected at that point of time, and Jio was so prepared with this. They launched full scale operations within a few weeks, right? They were preparing for years together. They were preparing for years and years together before launching Jio. They already had the background network set up. What they did not expect was, in spite of the years of preparation, they were still not ready for the load that was going to come at the time of launch. So this definitely will have a significant impact on Airtel, Idea, Vodafone. I think Vodafone has given a letter to the what is that? Try telephone authority in India, saying your bandwidth prices are too high for us to recover from any debt. We cannot, pay that amount. So the government said, if you cannot pay, then please leave the business, because Indian market is having so much of potential that it just simply depends on how well you play and you get the customers. If you play well and you get the customers, your revenues will be off the charts. But Vodafone is all not able to do that in India. They're not able to replicate the UK success over here, because of which they went and complained saying your cost is too high, the bandwidth cost is too high. And Try simply said, if you're not able to pay this, then don't bid for it or please leave the country. So when you are facing that issue where you are facing market losses, or you're not able to gain the new customers, or you're losing out on the franchisees, all of this will cause a question over the going concern. Next is shortage of important supplies. That is, the basic raw material is short, or raw material is banned, or raw material is not available. Think of oxygen. Many chemical plants across the world had to shut down because the government had imposed sanctions on oxygen generators. I personally am aware of one instance in India where Reliance Chemicals has a division where they test out various types of plastic for use. Okay, and this plastic, in the testing process, they need a lot of oxygen to react with a lot of chemicals. And because of the COVID crisis in India, the oxygen cylinders were completely given away for the hospitals, and whatever oxygen was being produced in the Reliance plants, they were supplying it away to the hospitals and outside parties. Now, when the generation is being used for an outsider, you cannot use any of it for the inside processes, right? Only to keep some certain things you cannot discard, because they cannot be restarted, or some very critical processes will be there. Except for that, they were not retaining any oxygen and they had to give away the oxygen, because of which they remained unoperational for almost 6 to 8 months during the year. So these kind of things will definitely cast a doubt on the going concern of the organization, because it is having a direct impact on the operations. There is no revenue when you don't have oxygen for a chemical plant. Obviously, there will not be any revenue. And when there is no revenue, there will be a question of going concern. And then you have emergence of a successful competitor. That's what I talked about when I mentioned Reliance Geo coming into the place of Airtel, Vodafone, Idea, all of these players, marketplace. So one, we have seen the financial conditions, then we have seen the operating conditions, and then they are also giving some other indicators. One is non-compliance of statutory requirements. Naturally, when you don't comply them for a longer period, people will start putting fines on them. People will start filing cases against them. All this will naturally happen. Then any pending legal proceedings, some of them you can be done with small numbers, but some of them you have to pay a higher amount. Changes in law or regulation. If you remember, sometimes I keep giving this example. This Ayurvedic companies face this a lot, where suddenly the Ministry of Ayush will decide that this particular plant needs to be protected. And for that, they will ban the cultivation of they will ban the harvesting of that product. They will not ban the cultivation, they will ban the harvesting. Harvesting under the taking out the plant or extracting the plant. They will let you grow the plant, but they'll not let you take it off. So that is change in law or regulation. You need to wait for them to unban it, and they'll tell you for how many months it is banned. So during those times, you need to be prepared and you need to have the alternatives arranged so that your operations continue. Otherwise, all the Himalaya products will be having a significant significant impact because if these bans keep happening and these bans keep happening very often because it changes from one plant to the another on a yearly basis. So 1 year they'll be protecting one particular plant, next year they'll be protecting another plant. Even the industry people will be aware which plant is going to be banned next and all. But sometimes there'll be ad hoc scenarios where they'll suddenly put a blanket ban, which will kind of have an impact, a direct impact on their operation. Next, underinsured or uninsured assets. This is one major issue across the world. Insurance. See, you as an individual, your earning capacity is at the highest at this moment. This is the age where you earn and establish a base for your future and your next generation, your previous generation. எல்லாத்துக்கும் நீங்க இப்போ இந்த 10 இயர்ஸ்ல சம்பாதிக்கிறது it will be the base. Okay. And if anything happens to this base, then there'll be a ripple impact not just on you, but it will also impact your previous generation, your parents, your future generation. So this is the time when you need to have a life insurance in place. This is the time. It is not the 60 plus people who need the life insurance. They have already lived their life out. At that point, there will be financial difficulties for making the medical payments understandable. But for protecting the asset as such, this is the time when you need to be protected because your earning potential just started. This is where you need to be protected. And life insurance, health insurance, all these are kind of mandatory for you at this particular point of time. Okay. So that is your underinsured or uninsured. With respect to assets, also you can have this discussion when you think of any operational losses or when you think of any market situation scenarios where the insurance is not able to cover adequate value of the assets. There was one. I think, yeah, there was one particular document I remember reading. It so happened for that organization that by mistake, instead of 100 percentage, in the terms and conditions, only 10% got printed. Okay. So it was a mistake from the insurance company. At that point of time, it was a mistake. And there were communications between the insurance company and this entity asking for the correction. But um, this was not documented. This was all verbal communication that was happening. And this was not documented. So everyone was like, okay, let it be because anyways, if there is anything we can see, அப்புறமா பார்த்துக்கலாம்ன்றதுதான் பிரச்சனை. So there actually arose a scenario where they had to claim the insurance, and someone from the legal department went through the entire uh, contract, and they realized that instead of 100 percentage of the asset, only 10 percentage of the asset is insured அப்படின்னு போட்டிருந்தான். So they immediately took a chance of that and paid only 10 percentage of the total claim. And this was a significant number actually. And the company was in shambles after that for a very long period because they had to go legal, get a revival, all of this. It really had a big, large impact on the organization because insurance company nicely played with the terms and conditions. So all these things will have a big impact. Insurance is something that can protect the organization from losses. If that does not happen, then it is a big impact on the very operations and the cash of the business. Now that we have gone through the indicators, let us look at the standard itself. Now, every standard puts some responsibilities on some particular people. Most of the time, we see that it is the auditor on whom we have some duties and responsibilities to be carried out. Here, there are some management responsibilities as well that this standard specifically prescribes. The management is also supposed to assess the entity's ability to continue as a going concern because when you are issuing the financial statements are supposed to be prepared by the company. It is not the auditor who is supposed to prepare, it is the management of the company. That means management means the company is supposed to be the one who will be preparing the financial statements. So in that case, naturally, when they are preparing the financial statements, it is by default that they are the ones who have to assess whether the going concern has been disturbed. General purpose financial statements are prepared on a going concern basis unless the management intends to liquidate the entity or to cease operations. When you intend to liquidate or cease operations, there is a different Ind standard for which you can be applied non-performing assets or assets held for sale. These you have a separate standard based on which you do the accounting aspect for that. They will not be accounted in the regular manner. There are certain rules and regulations for assets held for sale. Next. In case financial statements are not prepared on going concern basis, the fact would need to be appropriately disclosed. So in case they have assessed or they are planning to liquidate the company or they're planning to sell off the company, then the management itself has to disclose that in the financial statements. All the auditor has to do is whether the disclosure has been made or not, whether the disclosure is appropriate or not. This is what is our concern. Now, what is the auditor's duties? The very first duty is to obtain the sufficient appropriate audit evidence about the appropriateness of the management's use of going concern basis of accounting. That means if the management is saying that yes, boss, the going concern has not been disturbed, and we still believe that the entity's going concern has not been compromised. If they are believing, then auditor has to assess whether their assessment is correct or not. Okay. And if they say that the going concern has been compromised, even then the auditor has to assess why they say it is compromised, whether they have made the correct disclosures, whether they have taken the correct parameters or not. All of this needs to be taken into consideration. Determine whether management has already performed a preliminary assessment. So when they are giving a disclosure, obviously they will do a preliminary assessment as to whether the going concern has been affected. So for this purpose, what do we need to do? For this purpose, the auditor is required to cover the same period as that used by the management. So if the management has tested, so let's say they have tested based on the financial ratios. So for financial ratios, we all know that there is a particular period that you need to take into consideration, and then the balances will be compared so that you get the appropriate financial ratios. So if they have taken a particular period, even you have to take the same period so that you can arrive at the same conclusion. Just a minute. Next, auditor identifies events that cast significant doubt on entity's ability to continue as a going concern. So, as a part of the audit, you have, let us say, identified some fraudulent activity. Now, you believe that this fraudulent activity is a significant one, and the company might not be able to come out of this very easily. Then you can have a going concern doubt. You can definitely have a going concern doubt in this case, and you can very well establish that fact in the audit report, saying for so and so reason we believe that the going concern is affected, and this is the opinion we have in that particular regard அப்படின்னு சொல்லிட்டு ஒரு paragraph கொடுக்கலாம். Next, perform additional procedure. Apart from the regular thing, you may have to perform additional procedures. What are they, அப்படின்னா request management to make its assessment of the entity's ability to continue as a going concern. So whether if they have documented anything, then you can also go through it. If they have not documented anything, then you need to move on and ask for the subsequent questions. Evaluate management plans for the future. So if they have any future intention to sell off the company, if they have any future intention to divest or move away from this particular organization or company, then that needs to be taken into consideration and see from when this disclosure needs to come in. Consider the reliability of cash flow forecast. The current cash flows, actual cash flows have been negative for the last 2, 3 years. And then they are projecting a cash flow which is positive for the next 5 years, 10 years. Then you need to see whether these forecasts are appropriate, because I particularly see a lot of organizations which for the purpose of budgeting, okay, these people bloody the CFOs, the finance managers, for the sake of their benefit, what they will do is they will simply project a number which is not even appropriate for that organization. They will simply, just like that, they will make some budgets, they will create some random figures, there'll be no logic at all. They'll randomly create some budgets and with profit. The company will be earning or going into losses since the last 10 years, okay? Every single year they'll be making losses. Still, when it comes to the time of budget, they'll be like projecting a profit. The last 10 years, this is a real scenario that I have seen with 2, 3 entities in here. Last 10 years, they have been projecting a positive budget, and the result is always negative. In spite of that, this year also, they have again given a positive budget. And just imagine how, unaware the management is. The management feels that just because of having a positive budget in place, they'll be able to achieve it. And this is something that is obviously very wrong, because last 10 years you have not been able to achieve anything. How can you expect to have that constant positive budget in place? You need to modify the budget to suit the reality. You cannot just like that forecast any number. So by default, what happens is when we ask for financial statements, they also give us the budget. We'll say, okay, thank you. We will not ask a single question on the budget because we know that it is not at all logical. We know that it has been prepared just for the sake of convincing the management. That's all. So in such cases, you need to see whether there is going to be a real impact on this organization's abilities to move forward. Next, considering availability of additional facts or information since the date of management's assessment. So management will make their assessment at one particular point of time. Later on, you may come at a later stage. After 2 months, 3 months, you may come and initiate your audit. So at that time, if there are any changes in conditions or circumstances, you need to take that into consideration. And for going concern, it's not just financial operational conditions only. You can also think of natural calamities also. Earthquake, lightning, fire, floods, tsunami, anything can happen and it may impact the going concern of the operations. Next, requesting written representations from management regarding their plans for future action and the feasibility of these plans. So every business will have some future targets, isn't it? What we want to do, sales target, cost target, what we want to do in the next 5 years, 10 years. Either a target or a strategic plan under the compulsory every company will have. So based on that strategic plan, if you as an auditor believe that this strategic plan is not achievable, or if this strategic plan may not work out as intended, then you need to think of documenting it. And how do we document it? We document it by asking them for written representations. We ask the written representations to be made and submitted to us. So, what is a written representation? It is just a document given by the management saying, for this particular purpose, we are going to come out and give this saying, yeah, the future fee operations look sustainable. We have so and so plans, and we believe this will bring in so much of cash flows. And accordingly, we don't see any impact on the going concern. அப்படின்னு இதெல்லாம் them giving in writing and signing is a written representation. Even as an auditor, if you are not able to assess the going concern of the entity, you can still rely on this document saying, I have relied on the management thought process and decision. I have not I have made my assessment, but I was not able to come to a conclusion. I was able to come to a conclusion. Even in those circumstances, also, you can still keep this as an additional documentation saying the management believes that the going concern is not affected today. Okay. So, here, let us say the auditor has found something that casts a doubt on the going concern. In that case, what does he do, Abhina? Use of going concern basis of accounting is appropriate, but material uncertainty exists. What is this? Man, for some reason, auditor is not very sure whether they will be in a position to continue with the operations. So I think last class I was talking about BSNL also. BSNL, they had a negative 5,000 crore profit, negative 5,000 crore, basically a loss of 5,000 crores in one particular financial year. And that financial year, the auditor has given a qualified opinion saying, I'm not very sure about the going concern, because at that point of time, there were a lot of government entity sell-offs that were happening. So the auditor had declared that he is not very sure on the going concern aspect. So this is what they mean when they say use of going concern basis of accounting is appropriate. That means going concern is still valid. They will continue to operate for the next 1 year. But still, there is some material doubt that is going to be there, remain, because of the either operations or because of the way the market is or because of the way the legal changes have happened. So all of this will have a significant impact, because of which the auditor may believe that the material uncertainty on the operations, on the entity, if they continue to exist, then what do we do? Determine whether the financial statements make relevant disclosure. So naturally, you say that there is a material uncertainty that is existing due to so and so reasons, due to so and so law change, due to so and so circumstances. There are many businesses which go out of business because of GST or VAT or certain things like indirect taxes or direct taxes, because the margin itself is so very thin. Okay, 1%, 2% will be the margin. In that 1%, 2% margin itself, they will try to earn the profits. But what happens in such businesses is that even though the margin is less, the number of transactions will be high, because of which overall they'll be making a significant profit. So even if they make a small sale, it's like selling pencils in front of a school. the margin will be less, but you will earn a lot of income. Technically, stationary, you will always have 25-30% margin. So I'm just giving you example where the margins are paper thin. Okay, there are many businesses in the world where the margins are paper thin. You will operate just on 1%, 2% margin, but because of the number of volume of transactions on a daily basis or a yearly basis, you will be still reaping a significant chunk of portion profit. But these kind of businesses are by default affected when you apply a 5%, 10%, 20% GST on them or VAT on them. Their operations by default get affected because the cost itself is so high that they are operating on a very thin margin. When the cost goes further up by 18 percentage or 10 percentage, obviously the demand for that particular good or service starts dying down because the cost initially itself was very high, and on top of that you are seeing that there is a further 18 percentage increase on that. Naturally the entire business will close down, and there are many businesses across the world which are closing down currently because of the minimum tax agreement that the countries have made. The Gulf is seeing an unprecedented change in terms of taxation because all these years there was no taxation here. But now the VAT has come, with the indirect taxes have come, and that itself was a significant change for the operations in the market. And on top of that, the direct taxes are also coming in. Minimum 7% to 13% taxation is coming, because of which the businesses naturally will have an impact on them. Okay. But one lucky aspect I see here is, in India, they make it extremely complicated. They make the law extremely complicated to cater to all kinds of people. But here, for now, they have kept it very simple. The returns, the claims, everything is very simple. So we need to see going forward how it works out. So this thing will things like this will definitely have an impact on the business. There is no going concern effect, because even before VAT, after VAT, before income tax, after the income tax, the business can operate, but they are not sure how it will have an impact on the sales, how it will have an impact on the operations. So that's one cost aspect, that material uncertainty is still existing. Abdina, what do we need to do? We need to determine whether the financial statements are having the relevant disclosure. If yes, then since it is already disclosed, all you need to do is express unmodified opinion and include a separate section under heading material uncertainty relating to going concern. Since they have already disclosed it in the financial statements, you just give one small paragraph with a heading talking about the material uncertainty. The cost, the income tax aspect that I was talking about, the GST aspect that I was talking about, it is a one singular point of example, but there are many instances which can happen, which can not affect the going concern assumption, but still a material uncertainty can still continue to exist. You can think of Vodafone. Vodafone and Kane India had sales, and not Kane India. I think Kane is also UK based company. If you guys remember that Vodafone had a huge amount of assets that they were selling in India, and the agreement was made in UK. Okay, they were selling off the assets in India by making an agreement in UK. So there was no need to pay any taxes in India, and this has significantly triggered the back then government, and they went and made some retrospective changes to law. Pranab Mukherjee, I remember, had come up with a law which went all the way back to the introduction of the income tax law and income tax act, and it was a very clear cut message that this modification was made only for Vodafone case. So after that, the government has put some 22,000 crore liability on Vodafone, and Vodafone went to the International Court of Law to argue against this. Initially, they had a lot of hiccups getting the case across on the table, but the final outcome after years of fighting is that Vodafone international court ruled it in favor of Vodafone, saying India's steps to modify the law to gain this number is not valid. The International Court of Law gave a declaration. So even later on, the government also said, okay, we will not claim the 22,000 crores subject to so and so conditions. They gave the Vodafone certain conditions. So all these years, what will happen for Vodafone is that there is no effect on the going concern, because Vodafone has the potential to pay off the 22,000 crores claim. But it is still a very material amount, right? Just like that, you will not always pay those monies off. So you will still retain that material uncertainty point in the financial statements, because 22,000 crores, just imagine how big that number is. Even for an organization like Vodafone, that will still be a good amount of number. So you will ensure that a disclosure with respect to the material uncertainty with respect to this claim will continue to exist irrespective of the operations of the entity. So that is what is the going concern is appropriate, but a material uncertainty is continuing to exist. So if they have disclosed it, well and good. No problem, everyone is happy. All you need to do is put a heading and say it is material uncertainty related to going concern. If not, if they are not willing to declare, if the management is not willing to declare, then the weapon in your hand is the audit report. In your audit report, you declare saying there is a material uncertainty which the management does not want to talk about, or which the management does not want to reveal. And you can have or express an qualified or an adverse opinion with respect to that, and give your own, modified report over there. So once you modify the report, it will automatically be highlighted, because auditor's report is read very carefully by the investors and market participants. So as an auditor, if you're declaring anything adverse or anything like that, by default, it will be taken into consideration. Next. The use of going concern basis of accounting is inappropriate. Apina. There we were saying going concern is appropriate, but material uncertainty is existing. But here, the going concern itself is affected. It does not matter whether they make the disclosure or not. By default, your audit report should have a adverse opinion, because adverse means negative. You are going to say that the business is affected, or the operations will cease to exist within the next one financial year. Being clear, you need to state so that The people or the investors can take a decision out of that whether to continue with the company or whether to exit that investment. Next, management unwilling to make its assessment. Amrina, management knows what they have in mind, but they are not going to disclose it, or they are not willing to share those information with the auditor. When you, as an auditor, you need to decide what needs to be done forward. You can think of the additional procedures, you can think of the written representations, you see what can be done, and you prepare yourself for in case of any eventuality. Get the written representations, do your own analysis, document everything, and say, based on my analysis, I believe the going concern exists, but if the management is not willing to disclose, so what is the impact of that? You need to analyze and see if there is a requirement for a disclosure or an adverse opinion. So that is with respect to the standard SA 570. Just go through the standard, and in case you have anything on mind, just let me know. I will clarify. I can show you one of the written representations so that we can discuss about that. But you can see here with respect to this particular letter that I have opened. I'll show you like this, so it's much better. So here, if you see, this is a sample representation letter that is. Can we print this? Oh, great. Let me get that document itself. Yes, this is good. So you can see here that this is a format that is called as a representation letter. This is a sample one, and most of it generally covers most of the aspects that are discussed in a representation letter. So here it is, you see, it is being addressed to the chartered accountant. That means This letter is given by the management to the auditor. And across the other standards, we have seen that there are some specific standards where the standard specifically states that the auditor must obtain a written representation. So all of those representations will be combinedly put into this one single representation letter. So here, if you see, in connection with your audit of balance sheet, profit and loss, and cash flow statement. So these are the general statements that we audit. And with respect to that, we are saying that in conformity with the accounting standards generally accepted in India. This we are preparing this in as per the standards. Then here we acknowledge our responsibility for the fair presentation in the financial statements. All of this is basically that the accounting standards, the audit standards, the Companies Act, everything puts the responsibility on the management when it comes to the preparing of the financial statements. And that is what they are confirming here, saying these things have been prepared by us in conformity with the recognized accounting standards. So here they are saying next paragraph, if you see, they're talking about certain representations. Certain representations in this letter as being limited to matters that are material. So, some items have been discussed. What is that? One, preparation of annual accounts. Accounting standards have been followed. So, the financial statements are as per accounting standards. We had taken proper care with respect to the laws, the safeguarding. It's basically they are talking about the internal controls over here. Next, see. The third point, the firm has prepared accounts on a going concern basis. So here they are giving a written representation confirming the going concern. So here they're talking about non-compliances or deficiencies in financial reporting practices or any communications from regulatory agencies. Here they're talking about no material transactions that have not been properly recorded. So they're making a statement that we have ensured that all material transactions have been accounted. In case anything happens in the future, the auditor can show this document and say, see, boss, they have not accounted, and even I didn't get any doubt in the sample that I have come across. So I am not liable, I'm not responsible of doing it. The auditor can defend himself in court of law. So here they're talking about the accumulated uncorrected misstatements in the financial statements. Then you have the discussion with respect to the fraud. Then see again, ninth point again talks about the going concern, whether the company has any intentions to sell off the assets. Then they're talking about related party transactions, guarantees, contingent liabilities, significant estimates. All of these we have discussed where we said the written representations are required. So here there is discussion on the violations or non-compliances with laws again, and then there is any claims, basically contingencies, purpose of the business and not for any other purposes. So the contractual compliances, contractual agreements, anything is there. Then with respect to FEMA and what is the money laundering, there will be disclosure. International transactions as well as any related party transactions, whether they are in arm's length price or not, all that discussion will happen. In case they have done the transactions, which method they have used under the and then any foreign exchange gains or losses, whether they have been accounted as per the applicable accounting standard or not. What about the related party transactions? If there are there any related party transactions or பெரிய annexure கொடுப்பாங்க, then cash in hand. See, we as an auditor may not always be in a position to visit the company on 31st March and see what is the cash balance. So as of that date, is the cash balance அப்படின்னு அவங்க ரிட்டன் ரெப்ரசன்டேஷன் கொடுத்தாங்க அப்படின்னா எல்லாருக்கும் ஒரு கான்ஃபிடன்ஸ், ஓகே அட்லீஸ்ட் the management said this is the number, so that can be reliable. So stock valuation பத்தி ஏன் அப்படின்னா this you need to check whether the value of inventory NRV, net realizable value, the cost, or NRV. அதுல you need to assess whether there is a requirement for an accounting write-off or what அன்றது பார்க்கணும். அதனால there is some disclosures about it. So like this, there are a lot of disclaimers and disclosures that are given over here, which is given by the management to and addressed to the auditor. Because the standards specifically, you will not come across this written representations word in accounting standards. You will come across it only auditing standards, because here there is a legal requirement. The auditor is bound by legalities to that you get a document for certain reasons. With the management, and there are many cases, legal cases, where auditors are stuck in a legal logjam. So because of that, the standards, auditing standards, have made it compulsory for the written representations to be obtained from the management, because then the liability of certain things will move on to the management, because they are the ones who have done the fraud. And if auditor was not in a position to detect them, then the auditor should not be punished. Because of this reason, the written representations have been brought into the place. So you, as you can see, it is not just one matter that they discuss about. It's a comprehensive thing about all the elements of the financial statements, the compliances, the internal controls, the laws and regulations. Every single thing gets considered over here. Now let me come back to the standard. Okay, SA 580, which is the last standard in the 500 series, written representations. So what is a written representation? A written statement by management to the auditor confirming certain matters. So I specifically highlighted that over there as well. It is only certain matters that are discussed in the written representations. Certain matters, or to support other audit evidence. Audit evidence anyways gives you the particular hints, but on top of that, we need a confirmation from the management, so that from a legal perspective, if anything happens in the future, the auditor can submit these documents, based on which the liability will move on to the management, because they are the ultimately they are the ones who are responsible for the organization. Just a minute. Okay, so Let's look at these points. Written representations recognized as audit evidence as a response to inquiries. So, based on the laws and regulations that have happened and the legal suits that has happened, written representation is also considered as audit evidence, because auditor is making certain queries and these people are giving a written representation to that, so it becomes an audit evidence. But it does not provide a complete replacement of the audit evidence. So when they say written representations do not provide sufficient appropriate audit evidence, it means it's not a replacement of the audit evidence. Otherwise, what the auditor can do, the very first day when they are going, they can simply get a written representation, right? They can get a written representation and you're done with it. Like practically, you don't have to do anything because management will say yes, yes, yes to everything, isn't it? But you have to do the actual groundwork, and on top of that, you need to get a written representation. So they are specifically mentioning that it is only recognized as an audit evidence only for the purpose of giving responses to inquiries. Otherwise, it is not a full replacement of the audit evidence. You would still need to carry out your work. So it has to be addressed to the auditor. It has to be addressed to the auditor. So it has to be obtained for all financial statements referred in the audit report. Financial statements as well as periods referred in the audit report. The date of written representation shall be as near as practicable to the date of auditor's report, because when you are trying to give your audit report, you need to say that this is the inquiries that were made. So when you have a significant time gap, then obviously there will be a question, what if something happened after that? Okay. So because of that, you need to try to get that written representation letter as close to the audit report as possible. So generally, they will try to have the written representations, the financial statements, and the audit report on the same day, generally, so that there will not be much of a conflict. So here they are giving a basic guidance as to what are the areas in which you can get a written representation. One is management responsibilities, for which we can get a written representation. So for preparing and presenting the financial statements, we need to get a written representation. About what? About preparing the financial statements in accordance with the applicable financial reporting framework. So here in the PDF, if you remember, there they said we have prepared as per the accounting standards. So Indian accounting standards are applicable. So there they specifically mentioned the accounting standards. So financial reporting framework is the accounting standard. So they have to give a confirmation saying that they have prepared it as per the accounting standards of the current local market. So information provided to the auditor. If you would have observed, there was one paragraph say listing out what all were the documents that were given to the auditors. We have given the auditor this document, this document, this document. Abdine. We have given them all accesses, whatever was there. Abdine or para irundada. I did not specify it, but as agreed in the agreement, we have given them all. Abdine. They need to give a disclosure. Next, in the description of management responsibilities. So the written representations will be a little bigger because the management responsibilities, when the auditor is trying to get into an agreement with the management, there are certain things which will be listed out in the agreement, the management's responsibilities and then the auditor's responsibilities. All of those management responsibilities needs to be discussed in the written representation as well, because they give a insight on the overall financial statements. There are certain other aspects on which the written representations needs to be obtained. So here they are specifically saying as required by other standards on auditing. Here if you want. So there are certain standards where the standard was specifically mentioning the written representation requirement, isn't it? For going uncertainties, accounting estimates, it was talking about written representations. For going concern, it was talking about written representations. For fraud, it will talk about written representation. So there are few particular standards where the standard compulsorily talks about written representations. So in general, the management responsibilities is fine, but also apart from that, when the standard is specifying that you get it in these situations, then those situations also needs to be considered. Or where auditor determines that it is necessary to obtain one or more written representations. So in any case where it is compulsory or the auditor feels it is much safer to obtain the written representation, then they will get that done. Okay. So in different cases, you have got the written representations. As an auditor, how do you respond to those different situations? That is, respond அப்படின்னா, how do you audit those situations? One instance they're talking about is management is refusing to provide written representations. It rarely happens, but in case if it has happened, then what do we need to do? Discuss the matter with management, reevaluate the reliability and integrity of the management. Obviously, now a question comes on the management itself. Determine the possible effect on opinion. If they are still not budging, issue a disclaimer of opinion saying the auditல வந்து நான் எதுவுமே என்னால கண்டுபிடிக்க முடியல, but the management is for some reason they are refusing to issue a written representation which is casting a doubt on certain aspects. So because of which I am giving a disclaimer saying this is the scenario. So the investors beware அப்படின்னு ஒரு disclaimer. Now, there may be instances where the written representations have been given as per the standard format, but the audit evidence says otherwise. The audit evidence says there is an effect on going concern, but அவங்க வந்து there is no effect on going concern. The management is not accepting that there is an effect on going concern. All these things can happen. So when the written representations itself becomes doubtful, then what is it that you can do as a auditor? In case of having concern about competence and integrity of management, determine their effect in reliability of written representations and other audit evidence in general. So if the management's competency and integrity have come into question, so the reliability of written representations and audit evidence both get questioned. See, if they are not giving that, that means there must be something wrong. அப்படின்ற ஒரு basic question வரும். So in that case, it is not just the regular documents, it is not just the written representation, it is also the entire audit evidence that will be questioned now. If written representations inconsistent with other evidences, perform additional procedures, because you have observed something and you have asked them to write it in the written representation. They are not willing to write it that way. Then if they are not willing to write it that way, you need to understand why the differences are there, why this discussion, why they are not accepting this. So you need to carry out additional, again you need to ensure that the sample size is increased. You need to carry out the audit evidence procedures to ensure that you are on a right side. If conclude that written representations is not reliable, again determine possible effect on audit opinion. In case of sufficient doubt over integrity of management, issue a disclaimer of opinion. This particular standard says if anything happens with respect to the written representations, you need to understand that they are not using the word unqualified opinion or the adverse opinion here anywhere. Here they're simply talking about a disclaimer, because written representation is not a replacement for audit evidence. Audit evidence இருக்கு. Audit evidence, based on the audit evidence, we are forming our opinion. This representations is generally only for the legal purposes. So if they are not willing to give it, then there are certain questions that get raised. அதனாலதான் if they are not willing, then you need to see if there is any additional audit procedures that needs to be performed. In spite of that, if your point of view is correct and they are not budging to that, then there must be a disclaimer from your end saying the management is not budging for some reason, the management is not willing to give this document that is requested. There must be something with respect to these particular items. அப்படின்னு சொல்லிட்டு you just need to give a simple disclaimer, not an adverse opinion, not a unqualified opinion. It will be a simple disclaimer saying investors, I could not get the written representation. So just be aware with respect to this. Again, ஒரு சின்ன disclaimer. So with that, we are done with SA 580 as well. So this completes the 500 series standards. In the next class, we can start up with the 600 series standards. Thank you, everyone. Have a good day. In case you have any queries, you can reach out to me. In case you want to discuss about any standards, anything, you can just reach out to me. So with this, we are done for the day. We will meet tomorrow. Thank you, everyone. Bye.